what's going on, guys? Edward here, back with another video, and this is going to be part 2 of the RevCan indicator. This is actually a paid indicator and it's exclusive for MT4 and MT5. And today in this update, I want to change a couple of things. Well, not too much, not too many things. One in particular. And in order to get the best out of this indicator, this is very simple to use. Okay, no complications. Don't overthink too much. If you're planning on using this indicator, I'm going to be very specific here. Take your time, maybe grab a cup of coffee, and enjoy the video. Give it a big thumbs up, in case you want to continue watching this sort of content. Okay, so let's go ahead and start. All right, with this particular indicator, as I mentioned, this is sponsored by RevCan. This is a paid indicator. If you want to actually get to this, you will have to go directly on their website. Okay, I do have a 15% discount for you. Like if you use the code TeamProfits, you will have a 15% discount at checkout right there. Okay, now let me explain what the new update is. Basically what the update, like I have done personally into this to make it better. I was using 2 moving averages before, 3 by the way, 3, the 30 and 50, and right here this is the 200. Okay, decided to change that. It's up to you. Remember that you can customize, you can use different moving average just to understand where the trend is going. Okay, again, this is like all the indicators I have shown in this channel. They work best when markets are trending. If markets are ranging, you're going to get a lot of false signals. And this is not the, the exception. So it is going to have the same thing in here. Unfortunately, you will get false signals as well if markets are ranging. Okay. When markets are trending, this strategy is going to work out very well. And as I mentioned, you also have to know price action, at least a little bit of price action, guys, to understand that, hey, in order to, for example, let me just mark up in here. For example, in this area, you see where the price is coming from. This is the 20. This blue line right here is the 20 simple moving average. Okay, is why I decided to use this one is because it's really good for scalping. I really like it for scalping because the moving average is very close to the candles. Okay, so if I want to just get in and out right quick, I can definitely use it. If I see, for example, the price all of a sudden maybe breaking below, hold on, maybe breaking below the 20, maybe that's a sign for me to get out. It's an early sign for me to get out of the trade. All right, so we're going to be using that 20 moving average. Price action is key right here. So it means that you have to see some sort of break. Okay, you see that the market right here broke this high, right? We have a break of a structure to the upside, right? Sort of it started consolidating, build up another structure, little structure right there. So when it breaks, you have one thing right here. You can wait for the break to happen. And if that break happens, and you're an aggressive trader, and you got the signal right there, and you're above the 20, you're also above the 200 SMA, it's bullish. Price is bullish. So take the advantage of that. So if the price recently broke this structure, sort of consolidated for a little bit right here below, boom, and it's breaking right there, and you got the signal, take the buy, stop loss below the swing low, okay, and take profit at least 1 to 2. That's what I recommend, okay? Always you can have a 1 to 2 risk to reward in case you are normally trading this way. You have a fixed target, okay, fixed take profit, which is normally 1 to 2. If you don't want to have that 1 to 2, if you want to maybe just place or just wait for the price to just continue, and as I mentioned, maybe wait for some sort of signs of reversing, which, this candle right there sort of broke below, right? That's a sign for you. Maybe if you entered right there in this area, as soon as the price is going your direction, I recommend you, once it's going at least halfway up, if this is your stop loss, Once you're one-to-one risk to reward, basically somewhere about there, take partial profits and move your stops on break even and let it run. You can maybe leave the 50% or yeah, let's say you enter with a, I don't know, 0.10, 0.10, right? Let's say you close, once you're halfway, your one-to-one risk to reward, you close 50% of that. You close 0.05 and let the remaining running and let the market do its thing. Now, if the prices keeps going in your direction and now you have that impulse and you have a correction right there and you have a break, right? Be careful with this. You see that the market is giving you an alert right there. I would recommend you waiting for the break of the structure, okay? Which happens right there with this candle. The market is telling you right there, is giving you the buy with this particular candle, okay? So that's the best entry. You want to re-enter? Okay, stop loss below. The low entry right here, TP 1 to 2. Say you want to call it 1 to 2 right there. Remember, once you are halfway up, you should be moving your stops on break even. Let it run. You see, as the price keeps pushing up, it gives you another entry right there. Watch out for that. I don't recommend taking that one in particular unless the price is doing this. Like if you have an impulse correction and it's like that, you know, it's starting to push up and is breaking, you can do the entry at the break. Okay, once the candle breaks, like for example here, you see you got an impulse, a correction, and then they got another impulse. You see the price broke, and with that break, you're getting that candle right there. That's the signal. Okay, so your entry would have been there, the stop loss below TP 1 to 2. But what's happening right there? You have to understand that market is very bullish and it's not going to continue like that forever. So you have to use logic as well. Hey, price has been pumping up for a little while, and it's a matter of time of at some point it's going to start reversing. So you better understand that it's necessary for the markets to correct. They're not going to be bullish all the time. So, you know, understand that, guys. So you won't be trapped. You know, at some point, eventually you're going to run into a loss. Okay. It is going to happen because the trend is not going to be forever. It's most likely going to start reversing. Now, the idea here, let me close this here for a second. The idea here is that you're only going to be looking for buys. You're going to get a lot of false alerts, as I mentioned, especially if the markets are ranging. Okay, sometimes we see, hold on, let me get the pencil. We see the market was sort of ranging right here in this area. Price stayed in a consolidation as well. Okay, so you're going to ignore, especially the sales. We're still above the 200, which makes sense to go buy. But be careful, like you're not going to be buying with this little doji right there, right? You're getting a signal right there. Why would you be buying right there? What did I say about break of a structure? You got to, if you want to look for the buy, you have to wait for the price to break. And if along the break, you're getting the signal, then you may take it. If not, if you're just getting a signal like that with a pin bar or doji, that's not an entry. Okay, that's not an entry. You want to see normally a volume candle. There's a lot of volume. So, for example, right here, you see the market did a double bottom, right? Price touched twice, and then it starts pushing up, pulling back, and starts sort of moving sideways right here in this little structure, right? Started consolidating, and then all of a sudden, boom, look at this. Look at the difference, right? Between this big momentum candle and just this little pin bar that was right there, or this one right here. You see, it's not good. Okay, ignore those sort of candles. This one right there, maybe you could have taken the buy and you came with a loss, right? Because market was already strongly bullish. You needed to correct. Okay, so it's not going to be forever. You took that buy, stop loss here, boom, you got stopped down. Okay, it happens. As long as you're not blowing your entire account, right? You're not risking. You have to know risk management. Okay. So in this area, you see you get the actual candle, boom, to push up right there. And now it gives you the buy. As soon as it closes, that's your buy, your stop loss below. The swing low, something happened here, crazy momentum. I'm sure this got to be some sort of news happening right here this week. This last 2 weeks has been crazy with the news, a lot of news. So, you know, it's expected. But anyways, you place your stop loss below the low, right there, below the swing low, and you go for that 1 to 2. Okay, you went well with this one. Look at what's happening right there. Price pushes up, pulls back, right? Crazy momentum. Then all of a sudden you have another impulse right here. It's giving you a buy right there as well. Be careful with that buy. Remember this, all this candle was a bunch of news right there, very volatile. And the price is just starting normally to push up. You can take that one, place the stop loss below. Okay, you can place it, but understand that this right here was news. Watch out, watch out. Maybe skipping news days, you know, better stay out. You see what happened right here. Price continued pushing up, sort of it pulled back, so it started moving. There was a support right here, and market touch again for a second time that support. Price to touch it again, basically a third time, and then boom, you got a big momentum right there, right to the upside. So what's the deal? Okay, that could be your entry. You see that price is actually sort of breaking these highs, right? Strong momentum with that candle. So that's your entry. Stop loss below the swing low, TP 1 to 2. It's not going to be forever. You're not going to be, the market is not going to be pushing forever, even though it keep pushing right there, but it's more moving sideways than it is bullish. So watch out for these sort of things, guys. Okay, look at that consolidation right there. Ooh, strong consolidation. So you see, for example, this trend, you know, market is ranging and now starts breaking, sort of starts breaking and trying to go to the downside. Now pay attention in this area. I don't want to miss this part right here. I'm going to mark it out with a box. Okay, I'm going to zoom in. All right, this area. Okay, let me get the pencil. All right, so look at what's happening. Market was ranging, ugly. This is ugly right here, right now. Very, very ugly, right? All range, right? So what do we get? Price is touching that support again. Boom, coming back, starting to come back. But what are you seeing? You see that, look at the red line, which is the 200, right? Market, the price starts getting closer to the 200, right? When it starts getting closer, you know that reversal or the price might actually start dropping, okay? And you see how market starts now breaking strongly to the downside. Look, 1, 2, 3, 4 candles, strong momentum candles breaking below that 200. That's a sign. It broke right here, but then it came back up. It means the consolidation was sort of still on, right? But this break right here was a lot more stronger, okay? You're getting signs that the price might want to reverse. It's failing to break these highs, and now it's breaking at least this previous low right there. It broke it very strong, right? So that's my sign that market may want to shift now, okay? So what am I going to do in this case? You wait. You simply wait. You have plenty ways, all right, as I mentioned, and sort of using the smart money concept, like you see this low, right? That was created right here. You wait for that low to be broken. You want to get in? Okay, you're seeing now a double top. That's nice. You're getting a signal here to sell. This is a very small candle and there is no break of a structure. So don't take it, okay? Right here, it's a decent candle, but there is no break of a structure. There's not breaking anything. You see breaking at least this zone? No, right? So now it's not breaking anything. You wait. You're still getting the signals. That's good that is giving you the signals. At least it's giving you some signs that wants to go down from there. Okay. So you wait for the price to do its thing. And then all of a sudden you have 1, 2 candles, strong candles. Look at that. One momentum candle here, very strong. And coincidentally is giving you the sell. That's your entry. Entry right here. Stop loss above that high. Take profit. Go for that 1 to 2. Okay. Once you're halfway down, and take partial profits, move stops to break even, okay? And that's it. You continue. What happened? Look at that. Look at what happened right here, right? Price broke, stop, pull back, another break. Look at that. Price recently broke that low, and you're getting another strong momentum candle break. And you're getting the signal right there. So that's your entry. Stop loss above the swing high and 1 to 2. Okay. Now, price sort of pulled back. You were on a drawdown for a little bit and then started dropping later, right? But now you're getting another sell. Would you take this sell? No, right? You're not going to take it. Is breaking something? It's not breaking anything. It would have to break this low, right, in order to get in. So, guys, this is what I'm saying. You cannot just trust 100% in one single indicator. You have to understand market structure first. Price action is key, okay? Of course, in combination with your moving averages with the 20, if it's below the 20, below the 200, it's giving you additional tips. At the moment, we're using 3 indicators telling us that it wants to go down. And our 4th and more important confluence is price action. If I remove all indicators, if I remove them, you know, I would most likely be getting in on the break. You know, price is breaking already, structure after structure. I have a break right here, another break right here, right? Price keeps breaking the structures to the downside. It's going bearish, okay? So you can either enter aggressively right here, or you can wait for the retest. The price will retest this support that became resistance, right? You wait for the retest, maybe take the signal right there, right after the retest, or you take that bearish engulfing candle. That could be also your entry, you know, without the help of an indicator. If you don't want to use any indicator, but just simply following price action. Okay. Now, if you know price action already, and you understand that going with the trend is a lot better than actually entering in a freaking consolidation. Okay. A lot better. So the question I always get all the time, oh, Eduardo, when do I know? When do we know markets are going to be ranging? It's very simple to see it. It's very simple to see it. That's why you can use moving averages. You know, you can use a moving average. And when you see that the moving averages are, come on, you cannot tell me you can see this. Hold on. Let me get the pencil again. So in this area, just look at this consolidation. Market is not, look at the 200 moving average. Is being broken, you know, is being retested, broken back again, another break down to the downside, then break another to the upside. So it's ranging right there. It's very, very clear that it's ranging. The same with the 20 moving average. If you see all of a sudden all this shit going on, you see it's respecting, like it's not, so it is not respecting, I'm sorry, it's not respecting the 20 moving average. It's just breaking it open, down, open, down. If it does that, you know, 2-3 times, you know, market is just building up liquidity. Market is consolidating. Okay. If the prices start all of a sudden, you start breaking the structure to the upside, little by little, you see it's sort of respecting the 20 moving average right there. Okay. It's sort of slowly starting to go up. But look at the size of the candles, right? Very small, very little. Maybe this was Asian session or something. There was a, I don't know. It was very slow. The size of the candles does not have enough volume. So I'm guessing is a Asian session, depending on what pair, of course. This is GJ. So maybe GJ has a lot more action during Asian session. Maybe this is New York session. I don't know. They tend to have less volume. GJ has more volume during London and Asian session, of course. So you see what I mean? It shouldn't be that hard, guys, to spot when markets are consolidating. You know, you see this consolidate. Look at the 20. Look at even though we're above the 200, you know, in a short-term period, the market is ranging right here. Look at the 200 being violated like multiple times. Like you see an impulse. So breaks below, breaks above, breaks below, breaks above, breaks below, breaks above, break below, break above, break. So consolidates and then break. This is an ugly ass consolidation. It's still sort of moving up slowly because yeah, it's at least creating little highs right there. But man, you know, this is boring right here to trade right here. If you see that, for example, you guys stopped out, let's say you enter, right? Let's see, okay, we are above the 200. Okay, I want to get in if there is a break and there is a sign of a break. So my zone was right here. The market is giving me a buy right here with this candle, but is it breaking to the upside? No, right? So it means I'm not gonna take it, right? So look at that. Price starts moving weird and then goes to the downside again and then breaks this structure. Am I getting any signal right here? No, it gave me a signal somewhere here. So it means I'm not taking this buy. You see? So the indicator right now is sort of confused. It's not gonna be giving you the actual thing that you want. You want to use it when there is a break. You see a break and you got a signal, boom, take it. Is it bullish or bearish, whatever direction, take it. Okay, I hope it makes sense, guys. And not just with this, it just could be with any indicator you're using. All right, let's continue. Like very strong momentum right there happening, right? And you see that is breaking, right? Let's see, let's go from here. This area, right? So we have this high and it was recently broken. All this bullshit right here, I'm not taking any bias right there. It's not giving me an actual break. It's giving me signs, but I mean, look at the 200 moving average where we're going, right? So that is telling me market is ranging. What do we have to wait for? A break. Where's the break happening? Look at how aggressive this break was, right? The next candle is giving you the buy. Oh, okay. The candle is not that beautiful, but look at the momentum with the break happened. So in this case, if you want to skip it, you don't want to trade it, you know, it's fine. If you don't want to trade it at this point, let's say you want to skip it. It did break though. It was a nice break with this candle, but the signal was giving at this little one. Okay. So maybe you took the buy right there and the stop loss below this low, take profit 1 to 2. Okay. Once you're halfway up, you move your stops to break even, take partial profits and let it run. Okay. But this would have been a nice because you see all this crap going on right there, all the small candles, and then all of a sudden, boom, you see that big injection of money right there. This is a sign. This is a good sign to actually take the buy. If you don't want to take it because Eduardo told me that, you know, if I see a small candle and is giving me the signal with a small candle, then I won't take it. You know, so it's fine. You want to just test it out for yourself, you see, all right? But you see the entire momentum that you missed right there. Sucked completely. Very slow right there. Market was ranging. It was going above and below the 200 moving average. The 20 was up and down until finally we're actually getting the most important thing, which is that high being broken with a strong momentum. Okay, take the sign. Right here, you're getting a sell. You are going to, of course, ignore the sales. It gave you another buy right there. But is that buy giving you a break of a structure? I don't see it, unfortunately. I can see, hold on. I can see if it break, but that's a small candle as well. But I don't know if it maybe broke that high, that little candle right there. You know, so maybe you could have taken that buy and a stop loss here, take profit 1 to 2. All right. Test it out, guys. You're gonna have to test it out and do a lot of back testing. Okay, so it's like with any other indicator, it's the same. You have to do your own due diligence. All right, it is part of the deal. Let me see. Let me go on USD CAD. Let's go on USD CAD and let's go on 15-minute time frame right here. For example, right? I'm seeing that I'm getting, you know, price is going bullish right here, and I'm getting a lot of signals, but none of the signals are actually good right here. You see, I'm getting, oh no, I'm sorry. This one was actually good. Oh yeah, there was a break. I'm sorry. Didn't see it. Let me get the pencil. All right. So what do we have? Price is pushing up, pulling back, pushing up, pulling back. All of a sudden, we have a big injection of money right there, broken. It broke the high and it gave the entry with this candle, right? Look at the size of the candle, all right? Stop loss would have to be below, right? It looks like it sort of went below. Don't put it too tight. Don't put it too tight, exactly right there. If you put exactly right there, maybe you got stopped out by the spread, maybe got you out depending on your broker, but don't put it too tight. I recommend you a few pips below. Maybe you got stopped out and you lost that one. Fine, that's a loss. All right, let's get it. Price from there give another break. Just pay attention to the structure. Pay attention to the structure. Impulse, correction, impulse created this high. You see, the market is giving you a buy with this. What? Would you buy with this? Would you be actually buying with this small? And this is actually a bearish candle? No, right? Even though it's giving me the signal, I will not be buying right there. I want to buy after a break. Okay. So again, after there, price creates that high, then pulls back, and then boom, it breaks that high. The size of the candle has a decent volume size, right? And it broke, which is important. It broke the high, and you're getting the signal, and you're above the 20, you're above the 200. Take it. Stop loss below the swing low. Take profit 1, 2, 2. This was beautiful. It was a nice, really move right there, right? You're getting a couple more buys right there. Would you take this buys? No, because it's not breaking anything, right? So ignore those. Okay, is that simple, guys? Look at here. Price created, it was sort of consolidating, right? It was a strong support and resistance. Simple to see right here. Price pushed up. It had a nice volume, nice momentum. Unfortunately, this one gave you the signal with this candle. Can we enter there? No, because there is no break. If you want to take that, be my guest, but watch out because there's no break. Yeah, it did push up, but it's violating my rule. If I enter right there, I'll be violating one of the rules, which is waiting for the break. Okay, so watch out for that. Okay, let's go in lower time frame. Let's go now 5 minutes. Let's go all the way to the 1 minute. I haven't tested out on the 1 minute, to be honest. I don't think we can get signals on the 1 minute. Now it's actually not giving on the 1 minute. Yeah, for some reason it's not giving on the 1 minute. Let's stick to the 5 then. I'll ask the developer for that, but looks like on the 1 minute, there's not showing up. 5 minute then, we're gonna stick to the 5 minute. In this case, what do we have? So we see price is all of a sudden has dropped. Really nice, has a strong break right here. We have a break of this support. Now it's a resistance. Price broke, came back up, retesting, and it's giving a sell signal right here. But is it breaking something? Nope, it's not breaking anything. The break happened here, right? Now after that, price broke, right? Pulled back, retesting, and then broke again. Are we getting any sell signal? No, nothing. It's not giving me any sell signal right there. So broke right there. Here it broke this little low. It's up to you if you want to take that one. It's very small, doesn't have volume at all. I don't know what time was this. Maybe, yeah, this could have been a bad hour. You know, there's no volume. That's what I'm trying to say. Right here, it broke this candle, strong momentum candle, and then the next candle, which is the little one, and that's where the signal is appearing. It's up to you if you want to take that one. Very similar to the previous example I showed you, right? Like the break happened with one momentum candle, which is good, but the next candle is giving me the signal and is sort of small. Maybe this is a sign for you to maybe take an entry, but not going. Let's say you're always risking 2% per trade, right? In this particular scenario, this is in a scenario where you can risk only 1%. Don't go too big, you know, don't go too big because you're not getting the confluences you want. So your stop loss above that swing high, take profit entry right there and take profit 1, 2, 2, right? Looks like you continue. It continue dropping. Yeah, really nice drop right there. You have an impulse, correction, and another impulse right here. You see it broke that low. This would have been another potential entry. Hold on. Right here, because the market just pulled back. You see, it pulled back and broke with a strong momentum candle and give you another signal there to sell. So you could have entered here, stop above the swing high, and take profit your 1 to 2. You go halfway down, take profit stops on break even. And if it doesn't reach your target right there, you know, you could actually get stopped out eventually on break even. All right. So as long as you're following, guys, your rules, no matter what indicator you're using, no matter. Look at this, nice console. This is what I like the most. I actually, to be honest, what I do normally is I place alerts. I place alerts above these highs and below these lows. When the market is consolidating like that, you see, recently had a nice break of a structure. Oh, this is beautiful right here. This is a perfect example. Let me open the pencil here. So you got that, right? So a strong support, double bottom right there. Price breaks aggressively the 200 that is coming from here. It was strongly bearish. And now we could potentially be shifting to bullish, right? So we have a strong break. Price starts consolidating, right? Building up liquidity above this highs and below this lows. What do we wait for? Do we take this buy and this buy or this buy or this buy? No. Do we take this sell, this sell, this sell? Nope. We are ignoring everything. We're just simply waiting for a break. And this is a good indicator for that. Okay, it gives you false alerts when markets are consolidating, but the one that you really want to catch is the one that shows you the break. Is that simple, you know? So you wait for the break. This candle right there is the one that's giving you the signal. So you enter right there, stop below the swing low, you put it there or this one anyways, doesn't matter. This was a huge push in this area. Sorry, I have to delete this. All right, so you see that this was a nice push to the upside. Beautiful, right? So this is the thing that you have to take advantage, guys. Whenever markets are consolidating, if you don't have the time to be watching all the time, if you're working or something, what you can do is set alerts. Okay, set your alerts and wait for the price, you know, to hit your alert. Then you see if the market is actually hitting it's giving you the signal there to go buy. Okay, and of course you have to be above your 20. If you're looking for the buy, above the 20 and above the 200. All right, but there's always got to be a break. If there is no break, you don't take the signal. Okay, it's that simple. You can use it also in trending markets. For example, by trending markets, I mean flags, or let's say this one, for example, right here. There's a nice channel. There is a nice flag right there. Look at the break, right? Of course, market is breaking this high, which is the important one. And look at the momentum, right? The market broke with that one single candle, strong momentum to the upside, and is giving you the buy. So your entry right there, your stop has to go below the swing low. Take profit 1 to 2. Once you're halfway, move stops to break even and let it run. Okay, I hope it makes sense, guys, what I'm trying to show you right here, and try to explain it as simple as it can be. This indicator will definitely help you. Those who, for example, who like to, you know, just stay on MT4 or MT5. I understand that sometimes jumping from trading view to MT4 to make the entry and all that stuff is sort of, you're losing and wasting time in there, and you might actually be missing the entry by that. So this one on MT4, you can literally stick to it, you know. So I like when markets are sort of starting to change the direction, and the 200 moving average definitely helps you with that. So let's go with this one right here. So you see there was a very strong support here, right? Market is start breaking. You see when a break's actually happening, you're going to see a strong momentum candles. Boom, breaking those lows. Unfortunately, there are no sell signals right there. Price pushing back up, sort of pulling back to retest the zone. And now you wait for the price to break this actual low right there. Depending on how you trade and how you see this sort of things, for example, right here, what would you consider that the break has happened when the body of the candle is broken, or the this candle, the bottom of the week. I recommend you waiting for the bottom of the week. So this signal was giving right there before the break of this low happened. This was the candle that actually broke that low and it closed below. So it's up to you. You want to take the entry not here, but you want to take it here. That's also another option. Maybe you can risk less. Again, you can risk just 1% or 0.5% of your account in this trade just because you're not getting the confluence you want. Okay. I hope it makes sense. So that's another option. All right. Price continued dropping, but it did not. Let's see. It gave a buy, then it started sort of ranging. We can see the consolidation. Market was consolidating there in this little box. Right. Now you have the price try to break right there. And is the candle giving me, oh, okay, I got it. It did break. So in this case, look at that signal is pointing. Is it pointing this one? I'm not seeing well. Hold on. Let me actually open this. Hold on. Am I seeing correctly? Oh, no. Okay, no. So this signal is pointing this candle, not this one right there. I thought it was actually aiming this one. Yeah, I was not seeing right. So, okay, it broke, pulled back, and then broke again. A strong momentum to the downside now is giving a sale right here. Okay, so that means that you can go with the sale. Where is it? Right here. You go with the sale right there. Stop loss above that swing high, right? And your take profit. Let me do it again. So your entry was right here. Oh, sorry guys. All right, so entry right here, stop loss right here, take profit, maybe 1 to 2 somewhere there. This is the 1 to 1. Looks like price did reach about your 1 to 1. You put it on break even. Price is pulling back. Did it stop you out on break even? Yep, looks like it got you out on break even. But then what happened? Did it continue? It dropped a little bit more, but not far enough. Anyways, it reached your 1 to 1 restore work, so that's important. So you won't be losing. So it's sort of respecting. So, guys, you see that it's very hard to actually have losses with this. If you're following the rules, you should be taking wins. Like you should be taking more wins than losses. You're still going to be losing because markets are not all the time going to be, like this one, for example. You see the market did break above. Market broke above right here. Broke this high, nice signal, right? The signal was giving you that candle. So this is your buy, right? Stop loss, maybe below the swing low, or you want to put it here, right? You were aiming for the 1 to 2. I'm sure right here the market didn't even reach the 1 to 1, but did it continue? No, it dropped later. So this would have been a loss. You would have been stuck in a consolidation, right? Very ugly right there. After making your entry, price pushed up a little bit, but then you were in a drawdown, then pushed up again, then drawdown again, and pushed up. So hey, your psychology will be playing a game right here. Very important. Did you close the position? Would you leave it open and hold all that thing? But look at this ugly consolidation that you fell into. All right. These sort of things are going to happen, right? So if you notice the market is really not even reaching your 1 to 1, it means it doesn't want to go anywhere. And most likely at some point, you're going to get stopped out. Market is ranging. Maybe you entered too late, on the trend. Price was maybe the best entry would have been on this one, when it broke above. That's the entry stop loss below and 1 to 2, right? This would have been the best entry. But entering right here, understand that maybe you are already like on the top of the trend. You're literally trading when the trend is about to be, over. The price is pushing, pulling back, right? You have an impulse, like that. And You got a signal somewhere. You're most likely you're going to be getting signals here, right? Somewhere there. Then you get a signal here, and you get a signal here, and you get another signal here, right? And at some point, you're also going to be getting even signals in this area, you know, when you are very, very high, very far away already from the push. So it's a very late entry. That's what I'm trying to say. If you enter here on a buy, hey, understand, look where the impulse is coming from. It's been pushing for a long time now, and you want to get into the buy, watch out for that. Use common sense. Eventually, at some point, price would have to pull back. So isn't it better to just wait, be patient a little bit more, and just, hey, yeah, use your head. Hey, price it's very overbought right now. That's a decent impulse. I don't think buyers are going to keep getting in control. And I'll just wait maybe for price to pull back, be in a nice position, maybe using the fib to see if it's on the discount area. And you can start looking from buys from there, you know, all the way back to the top. So simple price action as well will always help you, and it will make the indicators even work better for you, you know, showing you better things and not much clearer things. Okay. So I hope it makes sense, guys. Let me know what you think. Give it a big thumbs up. If you are actually using this indicator, I want to hear your comments, okay, and in the section below, letting me know how you're going with this indicator. Let me know if now this new, you know, with the 20 SMA in the 200, you can actually find a lot of entries, and using this strategy, which trading the actual breakouts and waiting for the signal to come out, it's actually helping you out. So let me know what you think, guys. Again, as I mentioned, go in the description below, you'll find the actual direct link to their website. And you'll have using my promo code, you will have a 15% discount for this indicator. So let me know what you think, and I'll see you guys in the next one. Take it easy, guys.